This is Eric Mwatha with Mwatha.com for the week of October the 9th, 2011. First and foremost, let's go and summarize what the day's action for today. We see the Dow down, we see the Nasdaq down about 1.1% for the day, and it's very clear that it's finding resistance as of right now on the 50-day moving average, which is where it stalled. And this 50-day moving average has been resistance about 3 weeks ago, and about 2 weeks ago we've been hitting that declining 50-day moving average, and that's exactly where we hit at the highs of the day earlier this morning, and the Nasdaq seems to be pulling back from that. Now, the last time we hit the 50-day moving average was around there. We pulled back all the way to fresh 52-week lows. Actually, before that, we had actually tested the 50-day moving average again. So here we are. And what does that mean? That means that unless the market can first and foremost have positive action above the declining 50-day moving average, which is somewhere in that region here, unless the market can find strength to move higher and recapture the area above the 50-day moving average, we're going to continue seeing market, to me, having occasions of a couple of days of rally like we did this week with a 3.5 day rally. But I think unless the market can recapture the 50-day moving average, what eventually happens is that the market rolls over. Now, what is encouraging for those of you who are looking on the long side is the market held. Once it hit this on Monday, once market opened, it gapped lower, actually opened lower below the August lows, but recaptured it by the end of the day with a strong close by the end of the day, and had another 2-day advance. So net, we see the Nasdaq here finding support from after retesting August lows, but at the same time now, after we've had a 3.5 day rally, we've come and hit resistance. Now this is the Nasdaq 3-year weekly chart. Again, so you see the same thing. We held the weekly closing lows of August. Once we pierced that on Monday, but we recovered. But now we see a market coming to an area where it's finding it difficult to move above a declining 10-week moving average. What that suggests is that, again, the market is basically, let's say between 2 points. Market is trading between August lows and the declining 50-day moving average, which has been resistance for the last couple of weeks. Let's take it on here. The Dow, same scenario here. We hit at the highs of the day above 11,200. We just kissed the 50-day moving average and bounced off that. So we are trading lower, having seen that. Also notice for longer term, even though we can't trade on this because this takes many weeks, if not months, for the moving averages, which is the 200-day moving average, is starting to show signs of rolling over. So there might be a longer term indication of where the market wants to go. Again, the Dow also held its August 2011 lows and bounced off that. Now we are coming and hitting resistance on the Dow's daily chart. If you take a look at the New York Stock Exchange, you'll see that the market at the highs of the day, over the yesterday's highs at the close and earlier this morning, we're trading right there, which is just an area outside this declining top line. So here's an area where the market has been finding resistance, like there, and there. And so I would say that this is also an area of resistance in that area. So we should not be surprised that the market is pulling back. And like I said, we've probably seen the highs for the next couple of days, if not weeks. If you check out my most recent YouTube video. If you take a look at the RSI on the hourly, you'll notice that we stalled there, which happens to be that high on the RSI. We stalled there on the hourly, which happens to be the high on the RSI. And this stall here, this area, led to new 52-week highs. So we've come here and we are stalling again right there, which corresponds to the highs of this morning. So it does not surprise me that the market is pulling back from those levels. And the interpretation is that we might see the market still under pressure week to week until it can move above the 10-week moving averages. Same scenario here with the QQQ, found support off the August weekly closing lows, and now finding resistance on a declining 10-week moving average. The XLF, we had talked about this at the conclusion of last week's trading, and we said we need to watch 12.13, which is the lows, the weekly closing lows of August. Now this market has been trading now. This is going to be the third week in a row that it has closed below 12.13. Earlier this week, at the highs of the week, it was trading above that 12.13, but pulled back before the close to close slightly under $12. So net, what that tells me is that we have not found enough strength to move back above August closing lows, and that tells me that the financials are still under pressure.